Good morning everybody and welcome to Stockradar's Stocks on the Move. Today's date is the 15th of July 2021. The miners seem to be holding all the aces this week, industrials are taking a pause, but as we know these can change, so we're always on the move trying to use our technical advantage to try and track these moves as fast as we can. Okay, my name is Richard Lee and I manage the stockradar.com.au website. Our primary aim is to educate via example. Okay, we have about 18 years of history of trading model performance. To support our methodology, we get on stocks when they start to trend and we jump off them when they stop. It's that simple. Okay, so today I want to go through firstly our format, which is just going through the overseas markets, looking at the ASX 200, look at the portfolio, how that stacks up at the moment, and some ASX stocks for you. And in trading tactics this week, I'm going to be talking about trends are your ally. They guide you, they help you, they let you know what to do. So I'm going to talk a little bit more about that today. But firstly, I want to get straight into the markets. And the first one we want to go for is the Dow, of course. And there's not a lot of change in the Dow. It's trying to nudge those highs at the moment. It's been just continuing high. There's no real concern here. Volume's okay, momentum's positive. There's really not much point in looking too much more on this one because it's still going up. And we've got these similar patterns here that we've seen here, the dump down, the buyers come back, the buyers come back, the buyers come back. And that's been supporting the trend and that's been the behaviour. So there's really no change in that behaviour at the moment. Okay, the NASDAQ, it's pushed through the resistance. It's on its upward slant again. We've got some good volume here. Momentum is starting to tick up again. It's above the average. So again, no real change here. And since this S1 level, we support this move here. You can see this volume's been pretty good all the way through. We've had one selling test here, which didn't even put a dent in the market. So again, no change to the trend, the trading behaviour of the NASDAQ. Okay, copper. A little bit different. It's finally had a little bit of a slowdown, and we can see here this lips I've highlighted here, and the volume here. There's some extra activity going on here, and as we reach these highs here, the market has come back off. So we are seeing some price pressure on copper. Certainly, again, there's no answer to these questions. There's only probability. So we don't know for a fact what's going to happen. We just play these probabilities, and at the moment, the copper price is having a little bit of a break. And we can see the momentum stuck down quite considerably. So we just wait off and see what happens there. The support bubble's down here at S1. It is still above the average, so we're going through a little bit of a battle at the moment with copper, but it looks okay. We're just having a little bit of a corrective phase. Crude, it's been very resilient in this market. We've seen some selling going on through here, but it's held up pretty well considering. We've got the R1 resistance here, we've got some selling here, so there's a bit of a battle going on. But for the moment, it looks like crude is holding up pretty well. We've holding this little trend move. Momentum is still positive. It's above the average. It's holding firm on crude. So hoping for some more action on that. And gold is really sitting in nowhere zone at the moment. There's not much happening here. We've had a big kick down here. We've had an attempted rally. It's come back. High, low, lower, high. It's in the nowhere zone at the moment. It's sort of something you leave alone and wait for a trend to appear. No trend there. And you can see here some selling, some buying, some selling, all going on through here. And the momentum is neutral at the moment, as we would expect at this moment. So that's gold and the commodities at this stage. Okay, now for the XJO, it's continuing higher, just like the Dow is. Again, we can all wonder about what's going to happen next, but really it's holding up pretty well. We've seen these patterns occur before. It's held up well. It's made this new high, and we're still in an uptrend. And you can see down here the momentum is still positive, a little bit flat, which is fine. It just means it's a steady uptrend, but it's still very positively above zero. So the ASX 200 looks okay. The portfolio itself lost 5 stocks this week, so we took some pretty good profits on a few stocks this week. So there was 5 out and none in. I added about 21 ETFs to the stock count this week in my 6 months review. So there were 21 new ETFs in there for you to follow. 13 of them are trending, 8 of them are not. I just want to try and give you an idea of the trending nature of these ETFs rather than actually put them in the portfolio and buy and sell them. I just want to give you an idea of the trending status and run the trend intensity rating over each of them for you to give you an idea. Okay, so of the portfolios are full. The 5 stock is full with 5 stocks. The 10 stock is full with 10 stocks. And interestingly enough, the conservative portfolio lost 2 this week and is back to 7 out of 20. We still have that very much that big focus towards the towards the big stocks at the moment. Okay, so in the portfolios we've got the banks, property and industrial materials still holding there. Boral's been an interesting one. It's gone flat because it looks like the business is about finished now. It may come back a bit when that finishes, I don't know, but it's gone a little bit flat for the moment. So that's the ASX 200. That's the sectors and the portfolios at the moment. So let's go and look at some stocks now. First off, we want to go to is our old favourite BHP, and it's trying to break through. It's just busted through this week. It's got up above $50. It's sort of broken out of this little range here. This isn't really decisive at this stage. It is a break. Volume has been okay. Momentum is positive. It's above the average. We've got this bullish type of pattern occurring here. So it's taking another shot at the moment. So we really like to see a little bit more oomph on this. We've got another day to go. I don't know what the market's doing today as yet. Probably it's not even open yet. So BHP is trying hard, trend intensity rating of 8. Another one I want to look at today is Fortescue, which Fortescue has a similar pattern. We've got this bias here, and I did look at this last week and we noted all these long candle wicks here where the price had rallied up and had been sold back down, which is meaning the sellers are trying to protect this zone around $25. But this week we've had a bit of a push higher. Demand has been strong. Again, the volume really isn't telling us much here, not inspiring me at all, but in my weight of evidence argument, it's above the average. Momentum is positive. It's still positive above the zero level. There's a slight uptick there, and if we get a breakthrough here, this trend intensity rating will go into positive territory. So Fortescue looks like it's having a go, just as BHP is. We're not there yet, but we're trying. So we just have to sort of keep an eye on that, and when the signal comes, then we follow it. Okay, now another little stock we have looked at recently, which is going along quite well, it's making new highs and has done for quite a while, is HELI. It does a lot of COVID testing. It's a pathology stock, so it's doing quite nicely in this market at the moment. We've had a buyback here, a signal back here, right back here about 320, 330. It's now up around 470. It's broken this high, it's broken this high, and if we go back and have a good look at this, we can see this is a pretty significant resistance area to break through. And if we look a little bit higher there, we can see R2 up here, up around $5.50. So that's the next resistance level. Whether it gets there, we don't know. We just follow it with our stop. But for the moment, HELI is looking very strong, and so we just keep following this really higher. Moving, it's above the moving average. Volume's been quite good here. If I just squeeze this up a little bit, you can see some fairly good volume pushing, especially since this S1 was broken. Was R1, is now S1. So that's looking pretty good, and momentum is looking very strong again on HELI. So that's a good stock. One stock I want to have a little look at this week. It's been an interesting one here because we did have a very, very good break up on DXA a little while ago. Let me just blow this up a little bit. Okay, so we had a very big trading range pattern here, which held the stock down for a while. Support down here at S2, resistance up here, which is now S1 because it's broken through. But we had the breakthrough here. Good volume, good momentum. The stock took off beautifully, and all of a sudden we got a buyback announcement. And as we know, there's a great deal of debate on whether buybacks are good or bad, depending on the situation of the stock, whether it could be buying back stock or not. At the moment, the price has faltered and come back. So again, this is a situation where we really need to let the trend behaviour and our stops tell us what to do, rather than wonder or doubt and try and make a decision on the fly. We let our trade plan tell us what to do, and at this stage it's come back. The volume hasn't been heavy at this stage, and it still has positive momentum and positively above the average. So the jury's out a bit, so I'll be waiting to see at the end of this week where it finishes in relation to my stop loss, which you can see on Stockradar. If you're going to take a free trial, you can get all those stop losses and have a good look at where they are. But for the moment, DXA is coming back, and the trend intensity rating is still 8. It will probably come back a bit this week, depending if it holds above its stop or not. So DXA is an interesting one. It's faltered, and again, in this difficult decision period, we really need to let our trade plan tell us what to do to make the decision for us. So that's DXA, which is an interesting situation. Another interesting one, which we did look at last week, was Perseus, which I think when we were looking at it last week was up above here, looking very, very nice and rosy, and looking like it was going to shoot to the moon. However, it came back by the end of the week. Remember, I'm a weekly trader, so I'm always looking at what's happening at the end of the week. The intra-week stuff doesn't really bother me too much. I'm focused on the weekly trade, and this is a weekly chart. So it's come back, didn't break that area. It's holding up pretty well this week. It might be up a little bit today because gold's a little bit firmer. But it did break here, and there was a good signal here to add this to our trading models. It has risen above here. It's above the average. Momentum is strong. So the weight of evidence tells me the trend intensity rating is +9, which is very strong. We would love it to break through R1 to certainly give us a good kick, but it must do it on a weekly basis. Okay. So Perseus is still looking positive without having broken those highs at the moment, which looked like it was going to do last week, but didn't. And it's certainly not getting a push from the gold price because it's pretty flat and in nowhere zone as I showed you before. Okay, so the next one I want to have a look at is Promedicus, which gives us a good example of our trade plan and how it works, because we stop ourselves out when stocks go against us, even if we're in a loss situation or a profit situation. We've got losses to stop getting bigger, and profits we need to make sure we retain. So with Promedicus, we had a signal back here back in October. It had a good rally right through to about March this year, and we get stopped out. Okay, so in that situation we get stopped out because I need to protect my profits, and then I move into a stage where I don't know. I'm just going to wait to see what happens. The stock can go down, it can go sideways, or it can go back up again. Okay, inevitably I don't want to see it come down. That's why I do not want to be in it, because stocks always at some stage will come down significantly. Okay, so in this situation it did turn around and go back up again, so the signal is given when it does break higher, and of course this has been quite good. We've got a signal here at around $48, it's now at around $58, so that's good. But that's how the Stockradar strategy works. We insure ourselves all the time and we protect ourselves. The cost of protection, if it goes up again, that little area here between here is our cost of protection, but at least it prevents us from taking those big losses, which we do not take ever. Okay, so trend intensity rating is 9 for Promedicus. It looks pretty good. It's made a new high. We're back on board this one. The volume has been very good on this push higher, and momentum kicked higher strongly there. So of course we now have a very positive trend intensity rating of 9 for Promedicus. Okay, now the next one I want to have a look at is a bit of a controversial one. Not a controversial one, but it's just a very topical one, I should say, and that is Afterpay Touch. Now, I've talked about these two big trends we've had. You know, there's a lot of positive crowd behaviour behind Afterpay. Wasn't making money, just buying market share, and we know the dangers and the risk in that sort of thing. So, but we can still ride those waves because they can be very profitable, and that's why we always use our stops to protect, because it will come back at some stage. And this is a good example, because these two trades here, this first trade here, it came back, went straight back up again. And then this trade here, it came back up, but it never recovered at this point here. It got to 160. It dropped pretty quickly in about 3 or 4 months to nearly $80, which is almost a 50% correction. Okay, so we stopped ourselves out in this one. We took our profit, stood aside. In some situations like Promedicus, it turns around and goes back up. In this situation, it hasn't. And what has since happened from Promedicus, for Afterpay Touch, is it now is it's trying to rally higher, and it's failed and made a lower high. And that's a very, very wary thing that I'm very wary of in these markets, okay? And it's come back down to nearly the 80 level. It's tried again, and now we know what's happened over the last couple of days with the new entrance into this buy now, pay later thing, and it's put a lot of pressure on Afterpay. So some big names have moved into this area, and that's certainly going to temper the gain. So it probably got a little bit overblown up here, but we can still make money out of that because that's the crowd behaviour, which is what we analyse and what we look at, behavioural analysis. And the behaviour has now gone a little bit negative here, and we can now see the sell-off here. So those people that bought up here are hurting a little bit, and they're probably looking to get out on rallies and things at the moment. So we can see the momentum's gone right out of it, and so Afterpay Touch really is not one that I'm going to touch at the moment because it is looking very weak. Trend intensity rating is -5. That'll drop a bit lower next week. And we can also see, often you see the averages and the trend lines, often a little trend line up in the averages, and they follow fairly closely often, the angle. But when the average starts to go flat and turn, that's a pretty negative sort of situation. It means there's no trend in the market, so I wouldn't even be looking to buy or add this to the portfolio at any stage until we get some more positive signals from volume, momentum, or the average. So the average is an interesting one, and I might look at that in the next newsletter, or maybe in the next video, so you can see a little bit about how I use that, because it's quite a useful tool. Not just whether the price is up is above or below it, but the angle of the average, and you can see here it's gone flat, which tells me that the price is just rotating around it, which is a negative signal to me. Okay, now another one I want to have a look at is, well, I can have a quick look at ZIP if you like. It's really, the story is there for you, clear to see. We've got the highs here back in February, and I think that's probably when Afterpay had its high. It came down pretty savagely from $12.50 down to, well, nearly down to $6, which is almost a halving in price. It rallied, failed, came back down, rallied, failed. So we've got a lower high scenario here, which is not a good picture for a stock, and it's not something that I would look at. I only trade uptrends, I don't trade downtrends. So all I'm looking is for uptrends, and at this stage there's nothing in ZIP, nothing in Afterpay touch. So the steam has gone out of those stocks for the moment. Okay, another one I want to look at is recently we did get taken out of Linus quite a while ago. We had a very good move on Linus. It had a huge trend from July last year right up through to May of this year, and then came down. So at this point here, again, I'm protecting my profits because I've got a big profit to protect from about $2 up to about $5.50. So that's a lot of money I've got to protect, and I don't really care what happens. I just want to put that in the bank and stand aside and be neutral. It's got a very, very psychological, good psychological effect on me because I feel happy that I've taken my profit and I'm standing aside. I'm not at risk because all of a sudden the price has come down a bit. So in this stage here again, I stop myself out and protect my gains and put them in the bank. Then this stock it goes, I'm looking for it to go either up, sideways or down. It goes sideways for a bit, who knows what's happening, I'm neutral, I don't care. Then all of a sudden we start to see a rally. Now, this week it's actually poked its nose through the highs there, but it hasn't got through there, a bit like Perseus. It hasn't got through. I don't know what it's going to do today or tomorrow, but I'll be looking for this that is a signal. If it does break through and has a weekly close above there, then it's a go again situation. It may fail, it may come back to here, I don't know. But at the moment I'm neutral, and that's exactly how I want to be at the moment for Linus. Okay, so that's how the Stockradar strategy works. That's how we trade uptrends and how we protect, use our stops to prevent us taking any big losses. Okay, now one other stock I want to have a look at, which is actually in our little portfolio. Next week I'm going to review the portfolio for you that I've got. It's up about 8.7% since March. It's looking very good. Then, look, I said to you before, the profile usually has one big winner. You might have a little average stock, and the rest of them will be middling gains. At this stage, we've got the big winner in mineral resources. ABC is the one that's a little bit of a loss, hasn't really done much, and we've got a couple of other stocks in there, Sol and Computershare, and one other one which is all doing okay. They're up to 7 or 8%. But this one, mineral resources, has been the big mover, and that's been our big winner, and that's where we make our money. When we get these big winners, that's what makes the difference. And if we don't take the big losses, it makes sure that we build our returns positively. So you can see with mineral resources, we have taken 1, 2. This is now the third signal we've been given, the third trend that's occurred. We've 30% one first, we've stopped and protected. We had a 13% rally, stopped and protected. And here we've had this one here, which has been a real boomer. And we can see the rally going through here. The volume's been great, momentum's been great. And this is a really good one. But we need to protect these gains. So I've got to stop in place to make sure I do protect the gains. Because I'm not about being right or wrong, I'm about making money. Okay? So this is the important thing, as I said, is to make money and not lose it. And not watch things go down the Gerber. So volume's good, momentum's good, mineral resources rating, trend intensity rating of 10, so it's looking excellent at the moment. Okay, so for all qualifying and disqualifying levels, you can go to the Stockradar Trading Centre where we have all our stocks in there listed with trend intensity rating, stops, reversals, stock picks, yes, no, all that sort of business for you to have a look at. It's the way I organise all my positions. Okay, so last week we went through being prepared. The market this week, I want to go through trends are your ally. I know it's an old thing, trends, but actually capturing trends, making money out of them can be a difficult thing unless we've got a trade plan to control us and make sure we're doing the right thing. So why do we trade trends? Trends are our ally, they're our friends, they're our conspirator, they're our partner, they're our confidant, they're our helper, and they will guide you in difficult times. And that's what we really need sometimes to help us get over the fence when we need a bit of help. Okay? So trends are your ally. They stop and go at the most unexpected times. So they will come and they will go, whether it's a CSL or whether it's a mineral resources. All these stocks have their day in the sunshine and have their day when it's raining pretty heavily and they're going down. So we just don't want to be in those things. So we just trade the uptrend. So they come and go, and we've got to be very careful. Just like society trends, though, it's nothing different really. The only difference between stock market trends is we're trading money. We've got money on the line, and that can make us psychologically think very differently and get very nervous, get very happy, get very reckless, get very fearful, all sorts of things. So it's really just trying to divorce yourself from that. Just think of it like society trends, fads in food, fashion, technology, they all come and go, move in and out, and we just follow them as they fade in and out, and that's what we do with trends. Okay, sometimes you've got a red signal saying stop, sometimes you've got a green signal saying go. So it all depends, and you've just got to follow those trends, not really trying to think what the market's going to do and try and second guess it. The key is not anticipating, predicting or forecasting. I don't do any of that sort of stuff. All I do is follow. When a trend is established, I follow it. There is nothing more simple than that in what I do. Okay? So what I do is I jump on for the ride. I love the ride. I love the roller coaster. I love the fun. I'm oblivious to expectations about what's going to happen. I'm oblivious to opinions about what people think. I take a fresh, unadulterated view and I look at my trade plan. Why fight it when we know that these trends deliver? And they deliver well, whether it be Afterpay at some stage, not now, mineral resources, yes, lots of different stocks, Boral, all these different stocks that have these big roller coaster rides, but we need to know when to get out of them. Okay? So, make your life simple. Forget about financial markets, stock markets. I mean, that's really, that's what really drives us crazy sometimes. All we're thinking about is a trend. And if you can focus on that without all the outside noise, it will make life a lot easier. If it ain't there, don't trade it. So with something like Afterpay, well, is this a buy or not? I really don't care. At the moment, it's certainly not a buy for me because the trend behaviour is not there. Okay? So, trends are your ally. Use simple evidence to determine a trend, and then I jump on. I use simple stop to determine a trend's end, and I jump off. Then I move on. I've made my money. There is nothing more simple than that. Okay? So trends are your ally. The premise that I run on Stockradar is there are big wins, small losses, and big losses. We simply don't let the big losses happen. If you cut those out, you can see where your bias lies onto your big wins. So again, it's not about being right or wrong in this market and you having your ego patted. It's about making money and especially not losing it. Capital preservation is the most important thing, and this we can control with discipline of ourselves. Okay, so that's about all I've got for you today. I hope you've learned a bit of something today. Remember, use those trends to guide you, okay? They will help you all the time. When in doubt, I use my rules and methodology to keep me safe and sane. Right or wrong, it doesn't matter as long as I make money over time. So I'm going to take some losses, but I've got to make sure they're small, okay? So good luck in your trading this week. Thanks for listening, and hopefully I'll see you all next week. Who knows what will bring, but hopefully it will be some more fun. Okay, thanks very much for listening, and I'll see you later.